Welcome to today's market report. European stock markets are seen open just lower on Wednesday as doubts emerge over the timing of new stimulus in the US, while results from Deutsche Bank, Barclays and Santander put the banking sector in the spotlight. DAX future this morning is trading 0.1% lower, FTSE 100 fell 0.3%, whilst CAC 40 dropped 0.1%. The US President Trump expressed dissatisfaction late yesterday about some aspects of the $1 trillion stimulus package hammered out with fellow Republicans. This suggests a lack of unity in the Republican Party camp that makes it difficult for Treasury Secretary Steven Mnuchin to broker a deal with Democratic leaders in Congress by Friday, when the $600 per week enhanced coronavirus unemployment benefit is due to expire. Meanwhile, the pandemic continues to rage in parts of the US, hotspots in Europe and across big emerging economies, including India and Brazil. Governments are having to double down on the vast amounts of stimulus and unprecedented central bank support unleashed since the crisis began. Global COVID-19 deaths have topped 659,000, with the number of cases beating 16.7 million as of 29th of July, according to Johns Hopkins University. The day will be dominated by the US Fed policy decisions and press conference at 7 o'clock London time this evening. The Fed isn't expected to change its interest rates or bond buying policy, but on Tuesday extended most of its emergency lending facilities for another 3 months. Some have speculated that Chairman Powell may indicate a future further loosening of policy at his press conference. In the corporate news, the focus will be on banking earnings, where huge provisions against loan losses loomed large. German's Deutsche Bank posted a second quarter loss despite a strong performance at its investment bank, as it put aside 761 million euros to cover credit losses. Santander also reported a 12.6 billion euro impairment, resulting in an unexpected heavy loss, while Barclays set aside 1.6 billion pounds. Belgian chemicals company Solvay reported a fall in second quarter net profit as the pandemic hurt demand. It expects a challenging third quarter. Sanofi and GSK have signed a deal to supply Britain with up to 60 million doses of a positive COVID-19 vaccine the pair are developing. Oil prices were largely unchanged, with a surprise drop in US inventories having little impact upon a market still concerned about the potential hit to fuel demand from the pandemic. Crude futures traded 0.2% higher at $41.12 a barrel. Brent fell 0.3% to $43.74 a barrel. Gold futures rose 0.1% to $1,947.30 per ounce. On the FX front, the pound has moved away from last key resistance 125.20, climbing to the 129 level overnight. The British currency refreshed the top level since 13th of March yesterday, but the upper line of an ascending trend channel from 25th of June tamed the quotes further upside. There are a few factors, however, add pessimism to the pound. They are Brexit, a second wave of COVID-19, and the UK-China tussle. The key US event later today is also weighing on GBP USD. According to the UOB Group, the GBP USD pair's recent performance hints at a potential move to the key 130 mark in the next weeks. The euro obtains the smile and pushes the pair euro-dollar back to the mid-117th this morning. The single currency is quickly fading Tuesday's bearish performance, and it has regained traction well above 117, the figure opening the door to a potential visit to recent 22-month peaks in the 117.80 to 85 band. The dollar index this morning is trading 0.2% lower at 93.507, not far removed from the 93.448 low last seen in May 2018. This is today's market news. Thanks for listening. We'll see you next time.